So we are doing, we have to create provision for doubtful debts. You know that provision for doubtful debts it's created as a percentage of what?
Net trade receivables.
It's created as a percentage of your net trade receivables. So your PDD is 10% in your year one. What will be your provisions?
Uh, my provisions. Yes, let me calculate.
So it will be
It will
10% of 98,000.
miss. Won't it be 2,000?
No,
10 this 100,000 minus 2,000
is
and then 10%.
98,000. Yeah. So will it be 9,800?
It's like it will be 9,000.
How?
Miss,
How?
let me check. Oh yeah, yeah, okay, miss.
Hmm?
Yeah, miss, you are correct.
Okay. Over here.
Miss, it will be 9,980.
Oh my God. 98,000 is left, right?
Yeah,
Into 10%.
okay, yeah, yeah.
Yeah.
Yes, miss.
Okay. For this, what will be the PDD?
Yeah, miss.
Yeah is not the PDD.
What?
What is the provision?
7,970.
Okay. For year three,
Yeah, miss. 19,600.
year four,
3,320.
okay. In the first year, you are going to do what? Create provisions, increase or decrease.
Create.
Okay. In year two,
Uh, it's decreasing.
old minus new.
Yeah,
Old minus new, the answer is positive. So the provision is decreasing.
yeah,
It's a good thing for you.
yeah.
Year. Old minus
It
new,
increase.
the answer will be negative. So your provision is increasing. So it's a good thing or a bad thing?
Bad thing.
And over here,
It's decreasing.
good thing or a bad thing?
Good thing.
And here, when you're creating, it is a bad thing.
Yeah,
So whenever it is a bad thing, it will be income statement debit. Yeah.
yeah, yeah. An income statement credit when it's good.
And you will say PDD debit.
Yeah,
Yeah, PDD credit, PDD credit, PDD debit,
debit,
PDD debit.
debit.
Remember, this journal entry will be passed with the amount of old minus new. If it is a decreasing, it is a gain for you and it will be shown in other income.
Yeah,
If it is increasing,
other expenses.
then it is a loss for you and it will be other expenses. Are you with me?
Yes.
Can you tell me the entry for bad debts?
Bad debts, debit, trade receivables, credit.
Okay, this all is done, right? Can you
Yeah,
do this for me? I will pause the video. The past paper question of provision for doubtful debts. If you can see over here, can you see this?
Yes, miss.
Okay, read.
On 31st March 2018, Sasha had trade receivables of 95,000. She wrote off a bad debt 750 and made a provision for doubtful debt of 2% of trade receivables. What was the figure for net trade receivables in the statement of financial position at 31st March 2018?
Tell me.
Um, so we could calculate this by
Trade
subtract
receivable was
the
95
yeah
minus bad debt 750.
750
What is your
and
net
then
trade receivables?
we do 2%.
Net trade receivables is 94,215.
Yeah.
SPDD 2%. It's 1885.
So I got 92365.
Yes.
So B.
Okay. Come on. You
How
have trade
the
receivables 25, provision 1100. Provision is maintained at 5% of trade receivables.
yeah.
Okay. So this is your old provisions which is given to you. And your new provisions is 5% of trade receivables. So when I
Yeah.
say trade receivables is 25,000, so 5% of it is how much? 1250.
Miss, don't we subtract 110 and then
Old minus new is always done in the income statement.
okay.
In your statement of financial position, or I would say in your balance sheet, you will always show the new PDD as a deduction from your trade receivables.
Okay.
So, what is your new PDD?
New PDD, it will be
New
20
provisions is how much?
it's 23900.
How?
Two oh okay, so we're finding miss,
Old,
what's the
old provisions is 1100. New
yeah,
provisions is how much? 25,000 into 5%.
miss, what's the difference between provision for bad debts and provision for doubtful
It's the
debts?
same thing.
Oh, okay. It's 1250.
So, how will this be shown in the balance sheet?
A deduction from trade receivable of 1250.
Yes, correct. Read this.
A business maintains a provision for doubtful debts, which two accounting principles are being applied: matching and prudence.
Good. Read this.
A trader provided the following information: which entry for provision of doubtful debts appear in his income statement for the year ended 31st March 2016.
So in the income statement, what comes? Old minus new, right?
Yeah. Yes.
The answer is negative, then it is other expense.
Yeah.
If the answer is positive, then it is other income.
Okay.
Can you give me the old provision?
Yeah, miss.
40,000 into 5%.
It's 2000.
New provisions 46,000 into 5%.
It's 2300.
Okay. Old minus new,
It's negative.
negative
So
how much?
other expenses.
Yeah.
300, right?
Yeah, next
As
it's 46,000 into how much percent?
4%.
So
Wait.
this is how much? 1840.
Yeah, 1840.
So 2000 minus 1840 is how much?
2000 minus 1840 is 160 as an income.
Hmm. As an income.
Yeah.
Okay. Come on, try this. I will pause.
Okay.
New provisions is how much?
5280.
Income statement. Old minus new.
Yeah.
It's negative 1280. As an expense?
Yes.
Okay, fine. Come on, do this sum. I'm giving you time.
Yeah. Miss, you're muted, miss.
It's an income statement. So can you tell me what comes in income statement?
What comes in income statement?
Hmm. Old
Uh,
minus new.
yeah, old
What
mines.
comes in income statement? Old minus new. Can you give me the
Old
old
mine.
provision?
6640.
What is the new provision?
5280.
Old minus new is positive or negative?
Positive. So other income.
How much?
1360 as an
Okay. In the statement of financial position, the full amount will come as a deduction of new. Okay.
income. Okay.
Can you read this?
Yes, miss. Shilpa's financial year ends on 30th April. On 31st March 2021, she wrote off a bad debt owned by Tahir as irrecoverable. Which entry did Shilpa make on 31st March 2021? Uh,
Entry for bad debts.
yeah. Entry for bad debts, it will be bad debts debit and Tahir credit.
Yeah. Next one.
Albert maintains a provision for doubtful debts account. Where is the closing balance on the account included in the financial statements?
So they're saying
Closing balance?
the provision for doubtful debts.
Yeah, miss.
Then closing balance of provision for doubtful debts, you will always remember that old provision comes on the credit side, new provision comes on the debit side. So we
Yeah.
always remember as OC and D. Old
Okay.
provisions on the credit side, new provisions on the debit side. So the new provisions, where is this shown in the statement of financial position? The full amount of new provisions.
Uh,
It is
it's a
shown as a
deduction.
deduction
Yeah. Trade
under
receipt.
receivables. In which section?
Is it other
Current
pay
current assets. In your
current asset?
you have trade receivables and you always remember minus new bad debts, minus new RDD. Yes,
Yes, miss.
shown in the current assets section.
Okay, miss.
Come on, read this.
Yeah, miss. Joseph sells goods on credit and maintains a provision for doubtful debts. He wants to increase his provision for doubtful debts by $250, with journal entry record an increase in the provision for doubtful debts account. Okay, so it will be income statement debit and provision for doubtful debts credit.
Option.
Option C.
Hmm.
Why does a business maintain a provision for doubtful debts account? Uh, to um have an accurate forecast of debts which will be uncollectible. C.
No,
No. Then it will be D, right?
no. To apply the principle of prudence. Okay?
Okay, miss.
Come on, do this. You have a provision for doubtful debts of 290.
Yeah, miss.
Okay, so this is old provision.
Yeah, miss.
During the year you pass this journal entry. Income
Okay.
statement is credit. Can you see this?
Yeah. So
Which
it's a reduction in.
so old minus new is a positive 25. Yes?
Yeah.
Old is how much?
290.
Can you give the new provisions? That is what they are asking. What was the provision for doubtful debts that was deducted from trade receivables at the end of the current year?
Will be 25.
Darling, 25, you
Oh, no,
passed
no.
the journal entry for old minus new.
Yeah, miss, I'm sorry. So it will be
They want
uh
you to find the
290
provisions. It will be
minus
minus 25.
25.
So
So
this will,
265.
yes. Okay, now I'm doing one sum for you. And the remaining sums I want you to try yourself.
Okay,
Okay.
miss.
See, whenever we make a provision for doubtful debts account, you remember you follow the format of OC and D.
Yeah, miss.
Credit, new debit. Are you with me?
Yeah, miss.
Old credit, new debit, which is called OC&D. Old would be the balance begin down, new would be the balance close down. If there is an increase in provision, that means income statement is debit.
Yeah.
Yes? So
Yes, miss.
PDD will be credit. So increase in provision comes on the credit side and decrease in provision comes on the debit side. Are you with me? So I
Yeah,
always
miss.
remember with OC, ND, okay, and DI. Decrease on the debit, increase on the credit. Are you with me?
Yeah, miss.
Provision for doubtful debts is maintained at 3%. 30th April, this is old provision.
Yeah.
Is this the new provision?
Yes, miss.
And they want you to make provision for doubtful debts account. So I would
So balance
old
begin down 13.5.
credit. Yeah, very good. Old credit,
Yeah.
new debit, new debit.
Balance close down 12,800.
It's an increase or a decrease?
It's a decrease.
Decrease of how much?
Uh, 700.
Yeah, so decrease on the debit side on the last date.
Yeah.
What will I write it as? Income statement. And this account should get total. The income statement can also come as a balancing figure, but we can also find it logically. Do not forget to bring this down. 2015 April 30,
Yeah, miss.
700. What will you write? Sorry, 12,800.
Balance. Yeah.
The same thing. Balance begin down.
Yeah, miss.
Are you with me?
Yes, miss.
Now I have done this sum. Remaining sums, that is of Susie, you just have to make a PDD account. Susie, Samuel, Ummati, Umtali, you also have to make a bad debts account. Try to do with the help of journal entry. Raja,
Okay, miss.
okay, Pitch, and there is Hamelia. So you will try to complete this entire PPT, and whatever sums you're unable to do, I will do those sums with you.
Okay, miss, no problem. Yeah.
Okay. So I'm stopping the video.